This is Bruce Blythe with the Vance Ag Network at CME Group in Chicago. It's the afternoon of Thursday, January 20th. Grain markets ended mostly higher today, with corn staging a pretty sharp turnaround. March futures were down over 13 cents earlier in the session, only to bounce back and then almost 13 cents higher on the day at $6.54 a bushel. That's up about 5 1/4 cents on the week. Jack Scoville of Price Futures Group here said the bounce back today was partly due to reports out of Argentina, where the Buenos Aires Grain Exchange cut its forecast for the country's corn crop by 4% to 19.5 million metric tons, which is even lower than the USDA's forecast of 23.5 million. This reflects dry conditions in Argentina that are crimping crop development, and as a major corn exporter, any shortfall in Argentina is probably going to send a lot of buyers to the U.S. even more to make up the difference. And, again, feeding into these bullish supply-demand fundamentals we've been talking about for weeks here, that were detailed in the USDA's report earlier this month. Corn yesterday hit a 30-month high in the nearby contract at $6.66 and a quarter a bushel. It's up roughly 4% on the year. Talk continues of potential $7 plus prices here soon. We might see that maybe by Valentine's Day, if not sooner. There seems to be little in the way of that. On the livestock side, also a pretty bullish structure. We had record prices in live cattle futures and feeder futures. The live cattle reaching nearly $113 a hundredweight equivalent yesterday, and feeders topping $130 a hundredweight. Phil Stanley, who's an independent trader in the cattle market here, in his words, refers to this as a bizarro world. He thinks prices have just run up to such an extent that they don't justify current supply and demand fundamentals. He thinks cattle futures may be $4 to $5 overpriced. These high prices are leading to increasing losses for the meat packers, who may eventually have to cut slaughter, and therefore that would pressure demand. Another cattle trader, Jim Sauter, likens to what's happening on the cattle side to the commodity bubble of 2008, when prices ran up only to drop sharply later in the year. He thinks there's a bubble forming that's about to burst. Traders seem to be getting increasingly skittish over this. The memories of 2008 very fresh here, although we continue to set new highs every week, it seems. So we shall see how that plays out. Once again, Bruce Blythe, the Vance Ag Network at CME Group in Chicago.